Imagine two people. They have the same job, the same salary, and the same daily habits. But in 20 years, one of them has a respectable savings account, and the other is sitting on a fortune of nearly $500,000. What did that second person do differently? They didn't win the lottery, they didn't get a secret stock tip, they just understood a secret about the money most of us throw away. That morning coffee, the lunch we order without thinking, the subscription we forgot we even had. What if I told you that exact pocket change could be spun into gold? It sounds like a fairy tale, but is not. In this video, I'm going to tell you the story of how investing just $20 a day can turn into a life-changing fortune. We'll follow the journey of that money step by step and see why it leaves a traditional savings account in the dust. So, if you've ever felt like building real wealth was a story written for someone else, you need to hear this one. It could completely change the story of your financial future. Let's be honest, for most of us, the world of investing feels like a party we weren't invited to. It seems reserved for people in suits, folks who have thousands of dollars lying around to just play the market. So most of us fall into a story we know all too well. You work hard, you pay your bills, and you tuck what's left into a savings account. You watch the balance slowly inch upward and tell yourself, well, at least it's safe. But here's the plot twist you didn't see coming. Over the long run, your savings account is a villain in disguise, secretly making you poorer. That's not an exaggeration. Even with today's savings accounts offering 2 or 3% rates, they are in a constant battle with a silent thief called inflation. Leaving your long-term money in savings is like trying to carry water in a leaky bucket. You keep pouring your hard-earned money in the top, but inflation is constantly draining its value right out the bottom. Now, don't get me wrong, for your emergency fund, a high-yield savings account is your trusted shield. Its superpower is safety. But for the grand journey, for a goal like retirement, relying only on that shield is like choosing to walk a marathon. You'll move forward, sure, but you're watching everyone else drive past you to the finish line. This is the trap. We think we're being safe, but we're accidentally writing ourselves a story with a disappointing ending. And it all starts with the myth that you need a mountain of cash to even begin the journey. So, how do you escape the trap and rewrite the story? The secret isn't some complicated financial scheme. The secret is your daily lunch order. It's the 2 cocktails you buy on a Friday night. It's the impulse purchase that felt good for 5 minutes. The real secret isn't a what, it's a how. It's a force of nature that Albert Einstein supposedly called the 8th wonder of the world. It's called compounding. It's the simple tale of your money making its own money, and our hero in this story is just $20 a day. $20. On its own, it's nothing. It's the cost of a mediocre Tuesday. It doesn't feel like the key to a kingdom. But what happens when that humble $20 becomes a character that shows up every single day without fail? Let's look at the raw numbers. $20 a day becomes $140 a week. That's about $600 a month, or $7,300 a year. You might be thinking, okay, that's a nice pile of cash, but it's not a treasure chest. And you're right, that's just the beginning of the story. The magic happens when you give that money a job to do. You don't just set it aside, you send it to work through investing. When you invest, your money earns returns. But here's where the story gets powerful. The next year, you don't just earn returns on your original money, you earn returns on your returns. Your wealth starts to build on itself, doubling and redoubling at a faster and faster rate. This isn't a get-rich-quick story. It's the story of how small, consistent chapters build an epic saga of wealth. All right, this is where the story gets really good. Let's imagine 3 different paths you could take over the next 20 years. In each story, you start with the exact same raw material, $20 a day, which adds up to a total of $146,000 of your own money over 2 decades. Path 1, the path of nothing. You spend that $20 every day on small things, never getting around to saving it. After 20 years, that $146,000 is gone, and your grand total is $0. A story of missed opportunity. Path 2, the safe path. You're a bit more savvy. You find a high yield savings account giving you a steady 3.0% APY. You faithfully contribute your $20 a day for 20 years. Your $146,000 contribution grows into about $196,000. You've made a profit of $50,000. It's a happy story. Your money was safe, you did well. But don't close the book just yet. Path 3, the path of growth. In this story, you do something different. Instead of saving, you send that $20 a day into a simple S&P 500 index fund. For decades, the S&P 500 has told the story of averaging about 10% in annual returns. Some 20-year chapters are lower, some are higher, but we'll use that 10% average for our tale. You contribute the exact same $146,000, but on this path, your money begins to compound. It starts earning its own money. A snowball effect begins, starting as a small flurry and growing into an unstoppable avalanche of wealth. So after 20 years of investing $20 a day in the S&P 500 with all your dividends reinvested, your $146,000 doesn't just become $196,000, it becomes $460,000. Let that sink in. Just by choosing a different path for your money, your story could have an extra $260,000 in it compared to the safe path. You put in $146,000 and it grew into nearly $500,000. The safe path built you a nice comfortable hill. The path of growth built you a mountain. Now every good story has its challenges, and you're probably asking, why the S&P 500? And this sounds too good to be true, so what's the dragon I have to slay? First, why the S&P 500? Think of an S&P 500 index fund with tickers like VOO or SPY as assembling a team of superheroes for your money. You're not just betting on one hero, you're getting a small piece of 500 of the biggest, most powerful companies in America, titans like Apple, Microsoft, and Amazon. This gives you instant diversification. If one or two of your heroes has an off year, you have 498 others to carry the day. Now for the dragon, risk. That 10% average return isn't a promise written in stone, it's the reward for your courage. In some years, the market might fly, soaring 30%. In others, it might fall by 20% or more. This volatility is the price of admission to the land of high returns. And this is where many aspiring heroes fail their quest. They see their treasure shrinking, they panic, and they flee, selling their assets at the worst possible moment. The key to victory is discipline. While the past doesn't predict the future, history tells an encouraging tale. The U.S. market has always recovered from every single downturn and climbed to even greater heights. In fact, there has never been a 20-year period where a diversified portfolio in the U.S. stock market has lost money. When the market is down, your daily $20 is just buying treasures while they're on sale. You have to be willing to navigate the stormy seas to reach the promised land. Finally, the tax man. In a standard account, you'll owe taxes, which will take a bite out of your final treasure. But specialized accounts like a TFSA can act as a magical shield against taxes. The core of the story, however, stays the same. If you want to learn which account might be best for you, check out my full explainer video, link in bio. Knowing the story is one thing, becoming the hero of it is another. Here's the 5-step map to begin your own adventure. Step 1. The quest for your $20. First, you must find the money. Track your spending like a detective on a case. Is it the coffee you make at home? The lunch you pack twice a week? The streaming service you never watch? This isn't about sacrifice, it's about choosing future wealth over a fleeting want. Step 2. Build your fortress first. Do not skip this chapter. Before you invest, build an emergency fund of 3 to 6 months' worth of living expenses. Keep it safe in a high-yield savings account. This is the fortress that protects your quest. If a real-life dragon appears, you draw from this fund instead of being forced to abandon your journey. Step 3. Choose your guide. You'll need a brokerage account to buy your S&P 500 fund. You can sign up with Wealthsimple. It will only take 10 minutes. Check the link in my bio. You can earn up to $25 when you sign up using my referral link. It's basically a free head start on your investing journey. Step 4. Set your ship's course. The secret to a long and successful journey is automation. Set up an automatic transfer of $600 from your bank to your brokerage each month. Then, set up an automatic investment into your S&P 500 fund. You set the course once, and your wealth-building ship sails on its own. Step 5. Let your treasure compound. The companies you own will pay you a share of their profits, called dividends. Ensure your guide is set to automatically reinvest these dividends. This is the engine of compounding, pouring a magic potion on your growing treasure that makes it multiply even faster. That's the map. The story is proven, it's powerful, and the main character can be you. Now, I have a question for our community of adventurers, and I want you to be honest in the comments. What is one small expense you could redirect to start funding your own journey? Let's share our tales and inspire each other. And if this story gave you a new vision for your future, do me a favor and hit that like button and subscribe for more chapters on building your wealth. Over the next 20 years, you get to choose your own adventure. You can set aside $20 a day and end your story with $146,000. Or you can invest that same $20 a day and potentially write an ending with over $460,000. The difference isn't the money you have now, it's the story you command your money to live. This isn't about getting rich overnight. It's about building habits so powerful they make your financial success almost inevitable. The moral of the story is clear, the path is simple, and your greatest superpower is time. The sooner your story begins, the more epic the ending will be. Don't let the myth that you need a lot of money keep you from picking up the pen. Your journey to financial freedom can start today with just $20. Thanks for watching.